Today, we'll talk about 10 rules of trading which every single trader should read every morning. We'll talk about everything: account protection, stop losses, how to build discipline, why you should take partial profits. Everybody talks about trading strategies, but nobody talks about how to be a better trader. Today will be the day you'll learn the secrets of pro traders. We have so much to cover. If you're ready, let's start. Welcome our free trading course, all about price action trading strategies and smart money concepts. With this video, you'll learn 10 rules of successful trading. If you are looking for a structured table of contents, I set it up for you. You can find it on Google Drive or directly from my website, which is in the description. It is important to watch videos in order to fully understand everything. Okay, let's learn 10 magic rules of trading which all traders need to know. You need to print these and hang them on your wall and go over them every morning. We will start with, of course, protecting your account no matter what. The number one rule of the whole trading world. Why? Because no money means no trading. Imagine two traders who manage $1,000 accounts. Trader 1 risks around 1 or 2%, and the other trader risks 5% or more for each trade. These traders were having a terrible day. Both of them kept doing revenge trading and had 10 losses in a row. We all did this. I did it myself, the revenge trading. Now, at the end of the day, both traders are upset and angry. Trader 1 account dropped to around $800. And the other trader's account is almost half gone. Now, trader 1 needs to make a 25% gain to be break even. However, trader 2 will need to make 100% back. Yes, 100% back to be break even. Can you make 100% and recover? Many of us cannot. You destroyed the account. No money means no trading. You do not even need to learn the rest of the rules anymore. Why? Because you have no money to trade anymore. Nothing matters anymore. So, most important rule of trading is protecting your account. Let's talk about dynamic risk management. Basically, you cannot enter each trade with the same risk. You need to assess everything before entering. I already published the high and low probability trades video. Please check that one too. Extreme high probability. These are trades. Everything is almost 100% perfect. You have a clear bias, you have clear targets, and you have multiple price action structure confirmations. And there is no economic data anytime soon. So you can risk a bit more than your regular 1R. For example, if your 1R equals to $100, you may risk $150 this time. Regular high probability trades. These trades are very similar to extreme high probability trades. However, if the date is very close to important economic data, like inflation numbers will be released tomorrow or 2 days later, you shall use your regular risk. Regular low probability. Now, as you know, I explained all the high and low probability trades in one of the recent videos. Imagine there is no very clear bias or very clear target. There is no clear break-off structures. So, you are half sure of everything, a little bit confused. This is a low probability trade. You'll risk less than normal. Extreme low probability. Now, this is the low probability setup with economic data day, like inflation numbers will be released today. Extremely unpredictable days. But imagine, I have a $10,000 account and I'm only risking $25. What will happen if I lose $25? Nothing. It will not even bother me. Still best to avoid eco data day, or at least wait the data be released and then look for a setup. Finally, no trade days. Believe it or not, there will be some days the market chops every single trader, up and down, up and down. These days, avoid the market. No bias, no target, no entry, no setup, and no pattern. You will see these days. Do not trade them. Not worth it. Rule number 3. Taking partial profits. Sometimes I see traders out there waiting and waiting to reach far away targets. However, some trades will have clear mid targets, like significant liquidity points and large imbalances. You cannot ignore these mid-level targets. Imagine your trade reaches a 3-hour win, but you are not taking any profit yet. You just went out and came back, and a crazy news came up, then you stopped out. All the hard work is gone, plus you lost money. When you see significant mid-level targets, it is always best to take partial profit. Rule number 4. Dynamic stop-loss management. Now, this is as important as taking partial profits. Break-even management is quite simple. Once the price reaches 1-hour profit or a significant take-profit level, such as a liquidity point or a large imbalance, now I can easily move my stop-loss to break-even. Now I'm in profit and I have nothing to lose. I have zero risk. These are the best moments of trading actually. Rule number 5. Embrace the losses. Now, this happens to me, this will happen to you, this happens to anyone. There's no avoiding this. Do not bother. Some days you'll have amazing trade setups. Loss of price action, high quality setup, amazing day. And you'll make your entry. And the price will not favor your analysis or your bias. It will not give you a single chance to make a profit. It will not give you a single chance to move your stop loss to break even. It will directly stop you out. Nothing can prevent it. All you can do is embrace it and accept it. This is the reality of trading. You should move on. Do not be stuck with it. Let's talk about rule number 6. How to decide to avoid trading totally. As I said before, some days market makers will get a jigsaw and keep chopping traders up and down. And you'll lose your mind, no bias and no analysis. These are the days you must avoid trading. Not worth it. If you cannot find a clear target, it is not worth trading. Because if the price has no purpose to move up or down, why would you even trade? Now, right before an economic data release like inflation, unemployment, growth rate, and interest rate decision, it is best not to trade. It is 100% unpredictable. However, after the data release, it can build a setup that we can look into with extreme low probability like risking 0.25R. However, overall, avoiding economic data days is better. Oh, the losing streaks. All of us had this. After each loss, your brain will push you to revenge the loss. And you will lose even more. So simple. Shut down your computer quickly and move away from your room. Otherwise, you can destroy your account. One last thing. Some days you'll have problems. It could be family problems, financial problems, or just feeling down. These are also days that you need to avoid trading if possible. Life is not easy. We all have problems. Just skip these days. Rule number 7. Trade fewer assets as much as possible. My personal suggestion is to keep it under 4 or 5 pairs. Nowadays, the amount of things that you can trade is crazy. You can trade hundreds of cryptocurrencies and tens of different Forex pairs. You can trade index futures, stocks, gold, silver, crude oils, and dollar index. You can even trade funds if you wish. However, all these will create confusion. They will also reduce your win rates because each asset class and the pair have special dynamics. Some will create a lot of ranges. Some will create very clear market structures, regular swing highs and lows. So, By jumping from asset to asset, you'll only confuse yourself. Keep it simple as much as possible. Let's talk about unrealistic targets that you must avoid no matter what. On social media, you will see these ridiculous posts. Crazy winners such as 1 hour to 25 hour or 1 hour to 50 hour. These have no base or reality. Avoid them all. You cannot flip an account every month. Making 100% every month is not possible. Of course, there could be months you can do it, but every month is not possible. So keep your expectations reasonable. Compound growth calculations. The most ridiculous thing in the world has nothing to do with reality. Just show me one person who did compound growth. Such a waste of time. Now, some people are sending me mails. I have a $1,000 account. Can I make $5,000 or even $10,000 with it every month? Well, you cannot, my friend. You cannot. Not possible. And it will never be possible. You may get lucky and do it once, but that's it. And finally, all those 100% win rate YouTubers and posts. If there is such a thing, 100% win rate consistently every month, you could start buying whole countries and islands in the world in a couple of years. Okay, let's get back to the reality. Rule number 9, real goals and real targets. Please listen carefully. In my opinion, any part-time or full-time trader, a mid-level trader, after 1 year of trading experience, can achieve at least 10% account growth every month. Yes, it could happen. You should set this as a target. 10% is a base. Over that is even greater. 10R guys, 10R. Cannot you collect 10R each month? How to master your setups? My personal suggestion is to start small. Start with 1 to 1.5R trading setups and master them. Then move to 1 to 2R setups. And then 1 to 3R setups. Well, 1 to 3R setups is actually all you need as a trader. More than you can ever wish. Develop this mindset. Collecting R. With each trade, focus on how many R that you collected. Some trades will be only 0.3 R. Some trades 2 R. Some trades will be 1.75 R collected. And add them all at the end of the month to see the final result. Your general win rate target should be 50% to 70%. You should try to keep your results inside this range. Some months may go lower, and some months it may go higher, but this is an overall great target. How many trades per week? All you need is 1 to 5 trades per week. 5 good trading setups will be more than enough to grow your account by 10% a month. Plus, less trading means less stress and more relaxation. Of course, this is not a rule. Some weeks you can extend these numbers. Finally, I leave you with my special discipline building routine that I do every single day. I will not go over this list. These are what I do every single day, no matter what. This is how I build my discipline and shape my mind and body as a person and a trader. This is not just about trading. It is about being a successful person in life, whatever you do. Okay, folks, these are the 10 rules of successful trading. You need to print these and read them all every single morning if possible. I hope you subscribe to the channel and like the video. Thank you, please take care and see you soon.